All right. How's my hair? It's been a long time since we did this, folks. Just woke up feeling frisky. Let me get this shared to Twitter. The tweeter machine. Paulie is here, guys. I know you're excited. Here talking AMC, of course. I'm not expecting a lot of people to hop on this live stream because I did not say that I was going to do this. I just kind of get a wild hair up my ass every once in a while. I haven't done a long video in a while, and I'll try to keep it. I'll try to keep it under a half hour. Watch in chunks if you need to, but I think this is really, really, really important information. Kids don't smoke. My name is Paulie, aka Paulie Sleepers from the fantasy football land. I am not a financial advisor. I've gotten some instructions, some tips from lawyers recently as to what I can say and what I can't say. And I do know more than the average bear by getting my fingers entwined into this community. Some things I can talk about, some things I can only hint about, some things that I can't talk about. So if you're here, you either have followed me for years for fantasy football advice and have started riding this AMC train with me, or you're a new AMC ape follower, and I appreciate both of you. I have never asked for one penny from any of my followers for any advice. The fantasy football community, I'm not disparaging anybody for trying to make a buck. I just never really needed to make a few extra dollars on the side with fantasy, never did Patreon, anything like that. And I'm not doing it now. And my YouTube channel is not monetized. So I'm going to say whatever the fuck I want to say, like fuck the 1%. All right. But hey, we could be 1% too, maybe someday. The 1% are just, better risk takers and better cheaters and better liars. Hopefully when we get to that point, we won't have to have lied and cheated to get there, but we're taking a risk right now. So let me just put that out there by saying that, yes, this is a very volatile, risky stock. But my personal feeling on the squeeze over the last 4 months has doubled. We're to the point now. I was saying at one point that we had a 50% chance of hitting a short squeeze. I would say that that's up to 80% now. This is going to happen. And the chart is looking sexy as hell right now. We have come out of this this bull flag that's been forming with ascending levels of support and descending levels of resistance, and it's breaking out of that bull flag very nicely. We also have the very rich and deep options chain, which we're going to talk about because there's some misinformation out there about the options chain. But what I said back in March and April is still very true. It's even more true now, that you want to be in a stock that has a deep and rich options chain. And if you're long, you want a big call sentiment, and it's there on any given day, a 65 to 85% call ratio. People are making a lot of money right now on this stock. I've made a lot of money on this stock. I haven't cashed out one single share. I cannot mention any specific price targets. I am going to throw some numbers out there in relationship to how I feel about them, but I cannot tell you when to buy. I cannot tell you when to sell. The only thing I could tell you is my previous video several weeks ago about an exit strategy might have gotten blown up last night. And don't worry, it's okay. I think the new exit strategy is going to be even easier, okay? So first of all, we had a great day, 15% yesterday. As I mentioned in my short video, we were not able to crack that resistance of $60. It's in the $60 to $62 range. Once we break that, we're going to run. Now, one good thing, like Trey mentioned, is this is our fourth test. And I say this because it's going to test it today. But yesterday we tested it 3 times and were rejected, and AMC is famous for breaking through historical resistance on its fourth test. So there's a high likelihood of it happening. There's also a massive double bottom on the chart right now, what Trey would call a George W. Big fat George W. forming on the 3-month chart, the 4-hourly chart, and yesterday's chart was unbelievable. It was a W, and then a big W to end the day. Triple dub. But this is what I want to talk about. The first thing I want to talk about is Ortex and this guy Eeyore, this verified guy Eeyore that works for S3 Partners that posts his squeeze score. Now, I wasn't in on the GameStop thing, and I'm guessing most of you weren't either, but Eeyore has a little bit of a tenuous relationship with the GameStop crowd because he posted some stuff showing that the squeeze might have been over before it even really started. And what I'm talking about is the gamma squeeze that GameStop had in January. AMC had a really quick $20 run up and drop, and AMC popped and dropped a few times and got up to, I believe, like $480. And believe it or not, they even said it in the congressional meeting. The head of the DTC even said it, that the shorts didn't cover during that GameStop squeeze. So that's why GameStop is still very squeezable right now. I think AMC has more potential, so that's why I have way more money in AMC. But this guy, Eeyore, works for S3 Partners. It's spelled IOHR. And yeah, I'm calling his ass out. I mean, I think he's super sus, guys. Eeyore Volsky. Is that the guy? Oh, no, that's some other guy. Sorry. It's the thing about going live and just shooting from the hip. Yeah. Eeyore Dusanowski. At Eeyore3. To cut right to the chase, Eeyore, it works for S3 Partners, and Ortex gets their data from S3 Partners, and S3 Partners is a subsidiary of the S&P, which is the company that said that all of these tranches of mortgage repackaging loans that got us into deep shit in 2008 were AAA rated. Even though, and watch the movie The Big Short, by the way. It's a fantastic movie. Christian Bale and the guy from The Office, Steve Carell. They repackaged all these mortgages, and the ones on top just look great. You know, it was like somebody handing you a stack of money, and the first ones are real, but the rest of them are just cut up pieces of paper. They didn't look deep enough to see. They knew they were there, but they showed them as AAA rated loans, and people were buying them up because, you know, mortgage loans were very secure and safe at the time. But underneath, there were shitty loans that Fannie Mae should have not ever allowed to go through, and other companies, not just Fannie Mae. But the S3 Partners and the S&P were the ones that said, yeah, these are AAA loans. They knew goddamn well they weren't. So now we are getting data from these guys on the short interest and the shares on loan and the utilization rate. Super sketch. And the only person I mentioned in the little write-up that there's two things that nobody's talking about. This is one of them, and let me preface it by saying that there is somebody else talking about it. Short the VIX on YouTube mentioned it briefly. I think that he should have accentuated it more, because to me, it's very, very telling. I am a conspiracy theorist by heart. It's just the way my brain works. But when there's two or more people that are scheming against a group of other people without giving them all the information, then it is a conspiracy. And we know that we're not getting all the information. Ortex comes right out and says that they're only getting information from 85% of the brokers. And we know that most of the information is on a T+2 settlement period, so it's 2 days late. And we know from the exchange reporting the other day that the short interest reported by Ortex was 20% off, 20% in our favor. I still want to follow them because like today they posted that the short interest went up. Okay, I'm sure that it did go up. There'd be no reason for them to say that it went up when it didn't. But there are ways that these hedge funds can cheat the system, and this has nothing to do with the fact that I think S3 is scandalous. They can borrow shares, not use them, and return them in chunks to make it look like they've covered their positions. They can also hide their shorts in deep in the money call options, which is one of the things that the DTC and the OTC is going to crack down on. And that's one of the things I want to talk about in a minute that no one is talking about. Let's just pull up AMC. It went to 57 yesterday. In the after hours, it went up to about 58.63. And then today we suffered a short attack in the morning, went down to like 56.67. But then somebody woke up, whatever exchange opens at 7 a.m. Eastern, woke up and started buying this dip. Now we're back up to close to where we were at 8 p.m. last night. We're at 58.14. And it's ripping violently. I think there's going to be a high volume day today. I think what happened yesterday was what I mentioned the other day. I think it was the FTDs, the failure to delivers from the May expiration, monthly expirations that we're covering yesterday. And then the next thing that we have is the gamma squeeze. And we talked about this for a long time, the options chain fueling this gamma squeeze and this infinite feedback loop that could form, because now there are options all the way up to $145. It sounds crazy, but it could get up to that price very, very, very quickly, because past 62, we have resistance at 70, and past 70, we have the all-time high of 77, whatever it was. And then after that, it'll hit 100 very quickly, and then it's off to the races. I think that AMC could get to the January GameStop type numbers without there even being any shorts involved, just gamma. That's how big this is. I can't mention specific prices, but go back and look at the GameStop squeeze, look at those numbers and listen to what I'm telling you. AMC can reach those type of numbers without the shorts even being involved. So that's how big this is. Here's the other thing that's huge, and we might end up being like 20 minutes today. This is great because I don't have a ton to talk about. Gamma squeeze happening through the week here. What's widely misreported is that, okay, 40.01 is the number because there's all these $40 calls that are expiring in the money. And every $5 increment above that, there's calls at 50, 55, 60, 65, 70, like I said, 100 all the way up to 140. Every $5 increment that we can reach is more and more and more options that expire in the money. And if you saw my tweet, it wasn't heavily researched, honestly. So, somebody might be able to call me out on it, but I'm pretty sure through some research that there was no stock in history that's ever had 10% of the options activity in 1 week of the overall stock market. AMC did that 2 weeks ago, and I think they're going to do it again this week. I think they're going to be not only the only stock to ever do this, but the only stock to do it twice, because there are tens and hundreds of thousands of dollars of options contracts riding on AMC right now, not just for this week, but out to next week and next month and January 2022, and believe it or not, January 2023. The stock could be the gift that keeps on giving if you know what you're doing. It has been for me so far. But the misconception is that they have to cover these $40 calls. That's really not how hedging works. As soon as a call gets close to in the money, they're going to start delta hedging for it and getting those shares. Each contract is 100 shares. And if you choose to exercise the contract, you're buying the 100 shares from them. They need to have them. They don't want to wait till $50 to buy $40 contracts. They don't want to wait till $60 to buy $40 contracts. So those are already purchased. The 45s are already purchased. The 50s are probably already purchased. Then we get into a gray area. They may not have the juice to have covered 55 or 60 yet, and they're probably hoping like hell to keep it below those numbers for this week. So I will expect some short attacks coming. But for every $5 that we finish above 55, so if we finish at 60, 65, $70, there's going to be more contracts that they have to hedge for, and then lather, rinse, repeat for next week. And it just keeps going and it keeps feeding on itself. That's this infinite feedback loop that I talked about months ago that's happening right now. Okay. So the last thing I want to talk about is our exit strategy without mentioning any price targets. Now, I had mentioned before that my strategy is to get out a little bit what I've put in at some point at an XXX number. And I do believe the stock could go deep into the XXXX range. And at that specific 3-digit number, selling a handful of shares to get my investment back. And then I'll feel very comfortable letting it ride as much as it possibly can because I've gotten my investment back. And now I'm on a free roll. And now I'm on house money. That's what I'm going to do. Now, there's lots of people out there talking about, their strategies without mentioning price targets as well, trades and Matt Kors and those guys. And I'm just going to say, without calling anybody out specifically, if you don't think people are going to be getting their investment back like I am in that type of strategy, at some point, they're not going to tell you that they're doing that, but trust me, they're going to do it. And I think it's a good thing. I think if we all do it at different points, because we're not going to set a price target on it so it won't screw things up, that we'll all feel better about it. Whether you invested $1,000, $5,000, $10,000, $13,850. It doesn't matter. But I have said that there's going to be multiple rips and dips. And the way a short squeeze works is they have to buy the shares and they have to buy them back from us. And the price rips as we just kind of hold. And they buy back their shares. And then at some point when a group of people have sold, it dips down and they wait. And then they buy the dip, just like we buy the dip when our stock goes down. They're going to want to buy it as cheap as possible, but then it rips back up again. So like I said, go back and watch what happened to GameStop. That was them just covering their options contracts, but it was the same principle of a rip, a dip, a higher high, a lower low, a higher high. And then you can kind of tell when it's done because you end up having a lower low with a red candle that engulfs a green candle. That signifies the kind of switch over to more selling pressure than buying pressure. But the reason why I've always been scared about selling on the way down is if they have finally covered and it's on its way down, then who's buying? That's why I want to sell on the way up a little bit here and there. Trust me, our shares aren't going to affect the squeeze, especially if we all do it at different price points. And we're talking about blocks of 10 shares, 20 shares, 30 shares. That's how I'm going to do it. I don't think you should ever enter a position with all your money at once. Like, hey, I want to buy $2,000 worth of whatever. And you just go out and buy it all. You should buy like 4 increments of 500 and try and average down or average into the play. Same thing on the way out. You shouldn't just say, okay, well, when it reaches this price, I'm gonna sell them all. Block sells like that is what's going to affect the squeeze. And also, it's just not smart. You want to average. But the thing that nobody's talking about is next Monday, the rule that goes into effect is not only that they can margin call whenever they want on the spot. Okay, you're called, your position is closing. This is getting ridiculous. You don't have enough liquidity or collateral to cover this. We're taking it right now. Do you have the money? Can you buy it right now? Okay, no, then we're liquidating your other assets. And by the way, there's another rule in place about who could come to the table and bid on these assets too. All these rules they're putting into place all have to do with the shorts and the shorts having to cover and the shorts being over liquidated and way in over their head. We know that the average short for AMC has held their position for 52 days. And if you go back 52 days, the price then was about $10.50. When you and me were buying, hopefully, because that's when I was telling everybody to buy, was in the $9 to $12 range. And that $9 to $12 range was when we were getting shorted horribly. I mean, you guys saw it would go up to $12 and then go down to $9. Do the math on, what that kind of price swing would be now. And their attacks are not as effective now as they were then. The stock was more vulnerable. They had a lot more shares. The interest was less, and they were able to attack us huge. Now, a lot of their attacks are coming through the ETFs. Now, when they attack through an ETF is a package of companies, of stocks. It's basically like an index fund. There's ETFs that have GameStop and AMC in them. They're doing pretty well, by the way. Shocker. But if they short an ETF and AMC is like 10 or 20% of that position, that means they have to short 5 shares of that ETF to have the same impact as when they short 1 share of common stock. So that's why we see sometimes these short attacks are a little bit more calculated. They're coming a little less frequently, and they're a little less impactful. What they're trying to do when they short us down is simulate selling pressure and get people to sell. And we know that apes aren't selling. We know that apes own 85% of the stock, which is great. We own the float. That's why we control this whole thing. And 95% of them are holding. We know these numbers. So when you see that dive in price, just know that nobody's panicking and selling. I mean, like somebody's posted this morning, we got the short attack from like 58.50 down to 56.60, like big deal. But like people said, like, hey, nobody woke up this morning and was like, oh, well, I'm out. Yep, $58, I'm out. I mean, we've been here before and gone to 77 and back down. And there was plenty of other opportunities to sell at that price if you wanted to. Nobody woke up at 4 a.m. this morning and decided, oh man, this is it, I'm done. The FUD today that's going to be, I think, the major FUD is the AMC insiders that sold their shares here in the last week or so. The executives. Looks like we are going to go 30 minutes. Shocker. Paulie's talking. Now, is it a bad thing that the AMC executives sold their shares? And it didn't impact things. I mean, we're talking about 10,000 shares, 80,000 shares. I mean, in the grand scheme of things, when you see how many millions and millions, hundreds of millions of transactions there are every day, they didn't hurt us. But people are going, well, yeah, but why should I hold my stock when these executives sold their stock? And I'm going to tell you why right now. It's because they can't sell during a squeeze. It would look very sus, as the kids say nowadays. It would get them indicted for insider trading. They can't do it. They have been advised by their lawyers and their financial team that, hey, if you want to make some profits, you better do it now before the squeeze. So this $40, $50 range is about as high as they could go. And why wouldn't they want to make money? We want to make money on our shares. They want to make money on their shares, but they can't sell it when it's X a share, because then it would look super suspect. Like, oh, well, did they know it was going to squeeze? How did they know it was going to squeeze? When did they know it was going to squeeze? What did they do to engineer the squeeze? All of these things. If they sell now, which they already have, at $45, $50, then they're making huge profits, and there's going to be no microscope underneath them. And GameStop executives did this 8 days before GameStop squoze in January. It's a common practice. It's smart money. It's not a bearish sentiment for AMC stockholders to know that the insiders and executives sold their shares. It's a bullish sentiment knowing the information that I just gave you. Okay? Now, let's talk about the bots. And then we'll be done. Kids don't smoke. If you're just joining us, my name's Paulie and I'm not a financial advisor. On Monday, next Monday, June 21st, I think that is, yeah. The new rule that says that they can margin call you on the spot also says that the bots are in control on the buyback. This is massive. This takes the human element out of it, is what they're saying. And they deserve it. It's high frequency trading by bots that does these short ladder attacks to knock us down. So why shouldn't the bots buy them back? This has never happened before. This will be the first and last squeeze that ever plays out like this. No company will ever be allowed to be over leveraged as much as these companies are now against us. No company will ever be able to buy back shares from a squeeze with a human touch. Meaning, and this is what hit me last night, that there won't be as many big dips. If the bot is buying whenever they can, that means that they can't let it run up to XXX and then let it run down and simulate that it's over and then buy back in lower and then let it rip again and wait and do the same thing. The bots are going to buy them back whenever they can. Boom. All the shares that are available on the market, whether it's, there's about 10,000 shares that circulate, 10 million shares that circulate out of the 500 million free float. Whether it's 4 or 5 or 10 million shares that day that are available, those will get eaten up first. And then the price is going to go up. And then they have to buy from us. And we can hold and hold and hold and hold and hold. There won't be, if I'm right, there won't be all these major dips that I talked about with like 3 peaks. It's just going to do what it's doing now, just faster. So it's still going to take them a long time to buy them back. They're going to want to do whatever they can to stop us. But once this gets started, this is going to be a lot more violent than I thought. And expect trading halts. Remember the last time I mentioned trading halts? It was 6 a.m. on the morning of our first trading halt. And we had 3 or 4 that day. I knew it was coming. It's coming again. The gamma squeeze is what's going to be started on Monday. And then from there, it'll all depend on how quickly we rise and when they get margin called. Once they get margin called, the bots are going to buy, and I think it's going to be very easy. Just sit and stare at the thing and decide when you want to buy, when you want to sell. I can't tell you when to sell. I can only tell you that I plan on selling in small chunks on the way up because I'm afraid that there's going to be no buyers on the way down. So there it is. I haven't given you any specific price targets. I think I've met my legal requirements. Not that there's a ton of eyes on me anyway. When I do my 40, don't smoke, Jesus. When I do my 45-second videos, I get 500 to 2,000 views. But when I do these, it's usually like 40, 50, which is fine with me. The reason why I do these long videos is to interact with you guys. I want you to make money right along with me. Most of you are up on your position. I can't imagine anybody that's listening right now that bought above $58. So I know some that bought that in the 30s and 40s. God love you. But everybody's up on this position. But the longer all this patience that we've had, have patience when it's running up and don't look at your profits because that's going to make it worse. I'm telling you, the potential of this is, as I've stated several times, the biggest squeeze in stock market history, which means the stock is going to go to unimaginable heights. Is it going to go to some of these 6-figure numbers that people talk about? I don't think so. I can pretty much tell you no. But I'm not mad at them throwing that target out there, and I've done the hashtag AMC 100K before, AMC 500K, because the more people that have that lofty price target in mind, the farther this is going to go. So I'm fine with that. So that's what I'm going to do, guys. That's what I would advise you to do if you asked me. So things are great. It's a great time to be alive. We're all part of history. I've said it several times. I can't believe that we got into this when we did. I just got the right information from Joe Albert at the right time and started doing my own research and realized that the data was there, which is kind of ironic because in fantasy football, I was always a film guy, not really much on analytics. I never shit on analytics because I see that there's a reason for it, but it's funny that, like, you know, this is a very technical analytical play. So it's allowed me to tap into a different part of my brain. But this call so far is better than when I said in week 2 of Alvin Kamara's rookie season that he was the best running back that Sean Payton's ever had. And this is the running back that Sean Payton's ever, you know, always wanted. And there's one of my second video on this page. If you want to go way back, it's there. This is a better call than that because this is some serious money. I don't know about you guys, but I am up a ton. So that's it. That's what I got. I really just wanted to talk about the bots and the SP partners that are giving us this data being pretty shady. So fuck the 1%. Watch for liquidations in the stock market because when they do get margin called, they're going to have to liquidate their blue chip stocks. We've talked about this before: Apple, Google, Facebook, Microsoft, AT&T, Tesla. When we start seeing those stocks go down, we'll know that it's coming. And then just watch and have fun. Hey, Brad Wire just hopped in the chat. Hodl, buddy. Love you. Brad Wire, by the way, if you do fantasy football, is an excellent analyst for offensive line rankings. So we'll look at the stock one more time here. We are at 57.81. We're still up about 1.5% in after hours. That's good. We're very vulnerable right here. We could get knocked down very easily to $52 or maybe even somewhere in the 40s. If we do, it's still going to be bad news for them because they'll hit a buy zone and then it's going to bounce right back up again. If not, we're going to test this $60, $62 level and see what happens. The shorts haven't covered. We know that because the stock hasn't shot up yet. Pretty simple. Love you all. Fuck the 1%. I'm out.